Hey, it's Gabriela Batista from Homes into Reality, and this is Toronto Real Estate by the Numbers for August 2022. As always, we'll start by talking about the average home prices of different types of properties in Toronto. For detached homes, you're at 1.648 million. For semi-detached homes, you're at 1.127 million. For townhouses, you're at about 819,000, while condos, you're at about 730,000. So how do these prices compare to the same time last year? Detached homes are down 1.6%, while semis are down 7.2%. However, townhouses are up 3.3% and condos are up 2.2%. If we look to how it compares to last month around, detached homes last month were down significantly, I believe about 7% they were down, and now they're only down year over year about 1.6%. So I think there's a little bit of a stability compared to last month when it comes to detached homes. They are, however, down from last year, which is still a pretty significant drop. Semis, however, are kind of the same story as detached were last month. They're down 7.2%. So there's a big chunk of value that was lost from last year, which if we look at property values when they go up year to year, which is the typical, it is not the case for semis. But the good news in terms of townhouses and condos is, those investments are still up year over year. So, people that were purchasing last year, they're not, because it's more of an entry level unit, they're not drastic changes. You're not having a ton of value loss. In a lot of cases, you don't have any value loss from last year if that's when you bought. The big value that is lost is from properties that were purchased earlier in the year, let's say in January, February, and March. And that definitely shows in the month-over-month changes when it comes to properties from July to August. Detached homes are up 8.7%. A lot of that has to do with the number last month being very drastically low, and it's kind of come a bit of a stability. I don't look at this as a trend. The market's coming right back up. I think it's just coming back to a more realistic number. Semis are down 11%. Again, that's a little bit more of a middle ground correction as well compared to last month where semis are actually up year over year. Those two numbers are probably your middle ground where values have dropped significantly year over year, and they're kind of at that midpoint. Townhouses and condos are down slightly. Condos are down 1%, while townhouses are down 4%. Again, like I said before, because they are entry-level units, the value really hasn't been lost unless you purchased something earlier this year. If you're looking year over year, they're still up when it comes to condos and townhouses. For both new listings and active listings, it's a very similar trend to what we saw last month. And I think it's been a few months now where this trend has continued, where new listings are down 10%, while active listings are up 25%. And the trend with that, to repeat it again, is while there's not much inventory coming on the market, the supply issue is still there. And even though new listings are down 10% from last year, active listings are up 25%. So it shows that properties are sitting in the market, having a harder time to sell, and days of market are going up. The interesting thing with new listings being down 10% again is showing that people seeing kind of a slower market. Sellers aren't really willing to jump into the market if they know their property is worth less. We'll probably talk about that in a little bit more detail later on, but that's just some of the trends that I'm seeing when it comes to active and new listings. To continue, another trend from last month is the sold activity. We're down 37% from this time last year. The market was busy last year, although I do remember last year being a tame market and it was pretty stable. My buyers then were able to look at properties and not be rushed every single time around. It's still down 37% for now. The market during the summer was very slow. Only the best priced properties were selling, and it took the average of 23 days on the market. So it's definitely higher than it was last year in terms of days on market. And properties aren't really selling unless, you're the best priced property, best looking property. The properties that are not competitive with pricing, with how they look and everything else, and maybe in different locations, are sitting in the market and they're not selling. So as a whole, what do I think about the real estate market? What I've experienced over the past, let's say 30 to 60 days, it feels like a bit of a standstill right now. Sellers are kind of in that point where, property values have dropped in a lot of cases, especially for detached homes, and they're not motivated to put the property in the market if they think it's worth more. And then, of course, when it comes to properties, people will always value their property more. And when they see those properties selling in, March, February, and January, they're not motivated to sell for significantly less than what they were worth. So sellers are staying pretty firm on their prices. And buyers, with another rate hike that just happened, they're not motivated as well. They're not jumping into the market like people are thinking. And if it's only the most motivated buyers who are buying, and they're only buying from the properties from the sellers are the most motivated. So that's why sales are down significantly, and there's a little bit of a standstill. I'm very curious what's going to happen with the rate hike of 75 basis points that happened earlier this week, how that's going to affect the market, because that's the one thing that people are looking in terms of, is that going to drastically change the amount of people in the market? Is that going to have more distressed sales come on the market? Are either demand or supply going to change drastically with that rate hike and future rate hikes if they happen? So that's all things that I'm looking at right now. All in all, it's been more of the same when it comes to these past couple months, but it's stuff that we have to keep our eyes out on. And I think at this point, we'll probably get, if you've been watching these videos consistently, we're starting to see trends. We're seeing trends of where the market's kind of going. Are we stabilizing in certain points of the market? Are we getting back to points where, buyers are interested, let's say, in entry-level units? That's things that we're all monitoring. And I think anyone who's interested, either buying or selling in the real estate market, it's good to keep tracks on these, keep your eyes on this type of stuff. And it's something that you want to talk to me about. I can talk for hours about this type of stuff. So you can definitely, book an appointment, talk soon with myself about your specific situation, because I think every situation is very different compared to what it was last year where everyone was just buying. I think every situation is different on whether you're better off buying, selling, or holding. So that's my thoughts when it comes to the real estate market right now. This was a fun one, maybe a little on the longer end. Who knows when I edit this one down. If you made this far, I appreciate you listening. But then again, if you are a first-time buyer in the Toronto market, as you know, I focus a lot on first-time buyers. Take a look at my description. We do have an exclusive first-time buyer list called Future Homeowners that we're sending, weekly content to our, most active people who are listening. If you're about a year out from buying and you just want information about the market, that's your best source. Look at your links and sign up to our mailing list, and we'll get you on the right track in terms of getting you from a prospective homeowner to a future homeowner. Anyways, Gabriela Batista, Homes into Reality. Great talking to you. See you next month, and talk soon as always. Take care.